Daniel, a natural place to start, I think our conversation is going to be about impact investing. We were talking about before recording about just like how I'm like really interested about the space. It's evolving. So maybe I guess a very rookie question for me would be: is what is impact investing? How do you define it?
That's a really good question. It often gets lumped in with ESG, but they're very different. And we could talk about that because I think a lot of people just sort of treat them as one and the same. But really, impact investing is centered around what's called a theory of change. That would be kind of what a thesis is to a macro investor. So really, what you're trying to do is you're trying to find what areas of society or in the environment can I improve? How can I measure that? And how can I account for what the net difference would be? And then which businesses kind of have the profile that this kind of positive impact is embedded in the business model, such that as the business scales, it gives rise to impact scaling and they're linked. So the impact isn't accidental. And I think one of the big reasons why there might be a lot of confusion is theoretically every investment can be an impact investment, whether that impact is grossly negative or positive. I think is where the impact investor can really come in.
Yeah, it's fascinating. So it's like it's creating a good in the world essentially, right? So like having something tied to the investment thesis that really relates back to, like you said, this theory of change. And at Amplify, you guys really focused on three key sectors, right? So like education, healthcare, and sustainable development. So curious as to how'd you make that decision, or how did the firm make that decision that these are the key areas we want to like change the world, basically?
Yeah, so the first starting point was kind of looking at where are the SDGs or kind of more established frameworks targeting, and where does Canada have some kind of comparative advantage? And Canada has world-class research centers and hospitals. It's a great spot in healthcare, from the whole gamut of healthcare, kind of from the drug discovery side all the way to the digital health side and in between as well. In terms of environment, it's the same thing. I know people like to harp on kind of our over reliance on mining and energy, but I don't think people realize that two-thirds of the TSX is kind of tied to these sort of companies. So we have world-class human capital in energy, and we're taking the bet that that same human capital can be applied to sort of thinking about sustainability instead of thinking about the traditional ways that we get energy. And then for education, it's a grossly underserved area. We I think are now the most active ed tech investor. So that's kind of how we looked at the three. The other thing, it's not that obvious, but there's a strong link between them. So when you look at things centered around environment, you can make the case, and there's a lot of research that supports that, clean, breathable air is very much, or let's say the opposite is highly polluted air is very much correlated to, you know, uh, health problems around breathing, asthma, and that kind of thing. So we like it because you can kind of target multiple outcomes between these. And now you have areas like synthetic biology that very much play in both of those as well too.
Yeah, and you're talking about like energy, and it's like as the world burns, and more science shows that. I think it's definitely a good thing. And like I said, I think that's an interesting thing I never considered. Canada is obviously a leading oil exporter, so but that knowledge should hopefully be like transferable also to like other types of energy that are not necessarily related to like burning the planet.
Yeah.
How did you get interested in the field? Like, obviously, you've been working in venture a long time. You're at BDC before, so curious as to like how does this interest come about?
Yeah. So I never knew impact investing was a thing. And I still think the average person doesn't know. And I think a lot of people, when they hear the words impact investing, might associate more with charity or philanthropic endeavors. For me, it was more when I was at BDC, I had the great opportunity to, in my last role before transitioning from BDC, I was working on government programs that kind of act as sort of like almost in a way, like kind of what the Fed is to public markets. So Vicky and VCAP and that allowed me to really get a good overview of what most fund managers are doing, what their thesis is like, and sort of their investment process and strategy. Well, what interested me is there wasn't many that were exclusively focused on kind of using technology for, you know, things around society. Clean tech has started to really pop up, but that definition is huge, and some might have a large impact, some might not. And then I thought, well, that's kind of interesting. And there was one fund out west that was doing it, renewal. And at the time, rewind about a few years ago, I had heard of what Catherine was building at Amplify Capital, which was Mars Catalyst's fund at the time. And we had a mutual friend that put us in touch. So it was great to learn that what I was thinking of from a macro point of view as a potential gap actually already kind of had this name and it was its own asset class. And then I just became increasingly more interested in it because it's still very early relatively. Like it's exploded in the last few years on a relative basis, but there's still lots to learn and to be done and to kind of shape where that asset class is going.
Yeah. Is it a myth that, like you have to give up, like you said, it's like people think of it as a charity, but like from what I've read is that, like purpose and profit do meet. So do you like, is that still something that you have to demystify when you're talking to like, like LPs or their partners that, hey, no, actually this is going to generate good return. And it's like, it also happens, the side effect of like doing good in the world.
Yeah, that's a great question, and I'm always torn when I get that. I'm a contrarian by nature, so I almost like if people think that way. However, I can't pitch the fund and raise a fund by having people think that way. So I have to find the balance of who I need to educate and who is fine. And I would tie it similar to diversity, right? Like if people don't think it could be an advantage in their culture and in their organization, my view is good for them, more for me, and more for the companies I work with. But in this case, I do think that that's kind of a widespread view, and I just think it's because of where we are, still nascent. Um, but I do find that it has some very lucrative properties coming at it from more of a macro perspective. So by definition, if you do it right, you can get many companies that in the impact sphere that are anti-fragile, that benefit from disorder and chaos. And because by definition, these are companies that are rooted with multiple stakeholders, communities, governments, corporations, and people. So, when we saw COVID happen, the portfolio got a huge lift because on healthcare and education, you can imagine how, you needed a solution that's scalable and you needed it fast. And it also caused kind of a big wake up call on the environmental side that while COVID was very serious, if we were to ever have a huge, and I would hate for this to happen, but like an environmental risk that's catastrophic, that's going to happen now and not a big warning sign for the next decade, you can kind of see how people would act. And that sort of created the urgency there. So the big thing is I think it has anti-fragility properties, which I don't think is widely understood. The next one is it's very sticky. Once you get something into school systems, into hospitals, into switching, thinking about energy in a different way, whether that's storage or renewables or advanced materials, most companies are trending this way anyways. They're not going to revert back and say, I think coal and what we did the last 100 years is the way to go. Most of them are thinking about ways where they can increase their bottom line, and they know that there's going to be punitive charges that come, whether that's carbon tax or carbon tax-like instruments that are going to be introduced.
Yeah, that's interesting. From a business model perspective, like you said, I think one is like in times of crisis, these companies will benefit because people will be like wanting to invest even more in companies that like you said, healthcare, education. COVID's I think the quintessential example, and then two is like it's almost like a ERP. No one wants to change ERP, right? Once you get into these systems, they tend to stick around, right? So there's longevity and retention in the business model.
Exactly, and that's exactly it. And the other thing I'll add is, we're usually looking at these kind of big urgent problems, and I think that's where one's impact thesis could differ, and the answer could be slightly different. So sometimes people send me deals that might benefit a very specific, I'll use healthcare as an example, or education, a very specific subpopulation. Whereas what we're trying to do is kind of back something that can democratize that access and give it to everyone, including that subpopulation, so that everyone can win in that aspect. So think about making healthcare more accessible in rural parts of Canada. Um, but I think if you can figure out how to do that everywhere, you can figure out how to do that in underserved regions as well.
Yeah, it's fascinating. And what about ESG? Like a lot of smart people I follow on Twitter have been kind of like, lambasting ESG, like particularly I think with the war in Ukraine where like it's, being contorted to like sell weapons where it's like, I don't know if ESG is about selling weapons. But yeah, curious as like the distinction between the two.
Yeah, that's a great question. So, the thing with ESG is when I see someone say things like ESG is just a scam, sometimes there's a lot of merit to what that particular credible individual is saying. So if you look to the I don't want to misquote his name, but I think his name was Tariq Fancy, like the chief sustainability officer formerly at BlackRock,
He
also
wrote a really
Canadian.
good series of posts. Yeah, actually, a friend of mine led me onto those posts. I'll link them in the show notes. They're very good, kind of like and counter ESG or more info about it. So
Exactly. The issue is he's being probably misunderstood and misquoted. You can now just have someone who just shares a tidbit, kind of clickbait article, and that's what a lot of people will end up believing. But he himself is very pro ESG and impact, and you could see that one of the reasons for his transition was probably because it wasn't executing on what he thinks is possible. So that's kind of one issue is you sort of have this huge, I would say, danger around misinformation because not enough people are kind of in the trenches to really understand what happens. Another is you'll have people who are, capital allocators, and they'll say ESG outperforms, and they'll link kind of a chart that sort of shows an ESG broad market index fund without understanding what that's comprised of. And right now, and I feel anyone who's listening to this, if they're suspicious, they can look it up for themselves. But most Think Vanguard, BlackRock, staple names, ESG funds is really what we had that's existed for the last 20, 30 years. It's a broad market index less a negative filter. And that negative filter usually includes things like most oil and gas, adult entertainment, alcohol, and a couple other things, national defense, usually anything to do with weaponry, but kind of what you'd think it would exclude. And then it's basically just a fund centered around big tech. If you break it down, what the biggest allocations are, and I wouldn't argue something like Facebook would ever fit our thesis, and that's what most people don't realize when they're putting money into these ESG funds. Their money isn't going towards this next, disruptive clean technology or disruptive healthcare company. It's going to Nvidia, Google, Facebook, and most of big tech, and it's basically just not going to some national defense, adult entertainment, and a few other sectors. So for me, that's not enough. And then you have the other big problem is I like things that are scientific. What I love about impact investing is there's a scientific basis to it. You have to be able to measure what the impact is, and you have to be able to account for what would happen if the technology you're bringing to market or the investment, if it's something later stage, didn't exist. What would be the net effect, and how do you model that, quantify that, and really think about that? With ESG, you have a numerous number of specialist firms that kind of exist, and they can't agree on what is a good ESG rating. And while I love the competitive spirit of why that exists, it's kind of concerning too. How can so many have so many differing views, leaving kind of the ultimate person who just wants to allocate their capital in kind of a confused way? Because you have to think, depending on the level of the capital allocator, they don't want to be in a position where they're going to get blamed for putting something. So like a lot of things in the corporate world, it could be nice to sort of have this finger you can point and say, well, hey, so think of the rating agencies. You're not going to get fired if you said, hey, it's a AAA rated instrument. I was just following what the pros said, right? So I'm not the biggest fan. On average, I would say with most of my conversations, most people think that's what I do. And while they're related, so all impact is ESG. Very little of ESG would be impact.
I'm going to quote you on that. That's a good frame. And like like I said before recording, I love doing these interviews just because it's a great way for me to learn. Like, so selfishly speaking, on the measurement front for impact, I find that piece fascinating, right? Because I looked at your portfolio and all different kinds of companies in different kinds of sphere. So then, does the impact is really related down to the individual unit of the company of like and the impact they're having, and then reporting back to performance on these metrics? So curious about how do you like, yeah, how do you think about a measurement and how it applies?
Yeah, that's a really good question, and probably one of the biggest parts of our value add as an early stage investor. What we like to do in our approach is kind of once we've done the initial work of kind of figuring out how well aligned and how embedded impact is in the business model, we can kind of think about outputs and outcomes. So outcomes are ultimately the things that you want to change, whether that's increased access to healthcare, uh, education, or reduction in GHGs. I'm trying to be as broad as possible. They get a lot more specific. There's actually a whole framework that you can go and kind of tie it back to, set up by Iris and the GIN, which is usually a good way to kind of tie what you're trying to do into something that could be a bit more established, because it's always good to have like a main body framework that you can kind of build off of. Um, so for us, what we like to do is kind of think about it as what are 1 to 3 things, outputs and outcomes, that we can kind of track and work with the company, but specifically, how can the company use this so it can be a KPI that helps them grow, flourish, and scale? How can these outcomes and this impact measurement piece help them articulate and heighten their value proposition? And that's the value add piece, right? The last thing we want to do is create more reporting or something like that. That's not going to add value. It has to add value if you do enough of the homework at the beginning to see how married impact is to the business model.
Yeah.
And
What's the state?
some companies do a great job at this. If you, by all means, we aren't an investor in Dialogue, but I'm a huge fan of the company. On their main page, you'll kind of see exactly how they're helping their customers, and they're referring to specific metrics. Um, I like to use this example because it's big enough that people have heard of it. But it's the same thing with our companies. How can they win an RFP with this? How can they kick down the door? How can they really show what they're doing works? And the part that works is sort of the impact piece.
Yeah, yeah, and it's super interesting, right? It's like I love dialogue. I use that example all the time, right? Like as a
Yeah,
quintessential like impact example, particularly during the pandemic, which I think they obviously benefited help people, right, with
yeah,
telemedicine. How
absolutely.
do where does Amplify sit in the impact ecosystem? You mentioned it's early, so maybe like I'd like to understand Amplify's position in the Canadian landscape and how early is it?
I would say Europe is much farther ahead than anyone, and then after Europe, the US, and then you kind of have Canada after that. In Canada, I noticed particularly now that there was a rise of kind of funds that identify as impact funds. And while there's no official governing body that kind of waves a wand and says you're an impact fund, you're not, I think there are just levels to the game, like anything else. And I can think of 3 funds off the top of my head, ourselves included, that I would say are impact funds. I'm sure there might be more. There's always some starting out, and of course, there are always clean tech funds that have their thesis around GHG reduction or some targeted outcomes that could very much fall in that range too. So I would say it's definitely moving more in that direction. In terms of at the capital allocator level, I've seen some of the I've seen Fonds d'Action really take a very strong stance in developing an impact strategy earlier than most others, and also keeping in mind that Canada's home to some of the biggest capital allocators globally, and it's just too hard for some of them, given their size, to invest early stage, right? So that's they're kind of hooked to sort of do things that are much later stage, and the bigger you are, the harder it is to kind of all of a sudden turn your company around into sort of an impact oriented company. Think like a publicly traded company with 20,000 employees. That's going to be very difficult versus what we do with sub 20 employees kind of thing. We can get right into their ethos early on and set it as part of the culture, the mission, and the vision.
Yeah, I think one of the things that I was reading on your website about how you approach investments is that you ask your potential portfolio companies to fill in like almost like a questionnaire, right? Are you guys like certified, etc.? So like when you're in the negotiation to invest, like how do you, like, I'm getting into the weeds here, but like curious to
Yeah.
hear about how it works.
Yeah, so we make all of our companies go through the B Corp assessment, and by far and large, most people we meet actually do share a bit more of a progressive lens. They are pretty mission oriented. They do want to see positive change, but sometimes people just don't know what they don't know, and it's not at all that they're ignorant. It's that we live in a very dynamic, fast paced environment. So going through something like the B Corp assessment could help, give you ideas about how to manage your culture. I'll give you an example. It's pretty common now for people to either not have kids or have kids much later in life. The traditional way of having kids has also evolved significantly. And you might have a founder that is, as far as they know, very inclusive, but at the end of the day, don't have these policies where it accounts for you know, people who are going to adopt a kid, people who are same-sex marriage, people who have a different type of family that's, different from the North American 2.2 with the white picket fence kind of style. You also have some people that view their pets just as much as other people view their children, and probably would appreciate, maybe having some of their insurance cover some of their pet care kind of thing. How you think about waste management internally. And so a lot of times people don't realize there's a lot of these little things that, little by little, it becomes a lot. And the B Corp assessment is a great tool to just kind of go through this rather large, substantial questionnaire and kind of see where do you rank. And I gave just a sliver of an example. It's much more comprehensive than what I just described. And from what we saw, most of our companies, all of our companies have gone through the assessment, and most are actually trying to become B Corp certified. Ironically, the pandemic caused a bit of a backlog, so it's taking quite a while to become certified. And when you do become certified, essentially you're amending your articles of incorporation to say that you're going to serve your stakeholders and not just your financial shareholders, which I think aligns well with the business models that we're seeking.
And obviously, you spoke a little bit earlier in the conversation about energy. So, what trends are you most interested today in that you're learning about?
Trends in terms of like new technologies that are exciting, or trends in terms of um, what it takes to kind of recruit talent, keep them there, what they're looking for, and that kind of thing.
Well, I would say actually, so I would ask at a high level, just things that you think are really interesting these days, right? So be it tech, be it a trend, like from a talent perspective. So yeah, curious about what's top of mind.
Yeah, so the one trend I'm finding is, and we didn't talk about it as part of this, but it ties back to your initial question on, some of the unique advantages of impact investing, but certainly one of them is culture. People, and you're starting to see it more and more now, don't view financial compensation as the number one thing. They like to have meaning, validation, and working towards something that means something to them. So a company with a very clear mission and vision statement can do very well in terms of attracting top talent. And you can kind of see it to a degree when you look at where the flocks of top Ivy League or top school grads are going, and they're going to these kind of disruptive companies. The traditional way of just kind of jumping onto Wall Street still works because it commands a very lucrative salary. But what I'm noticing is a lot of these same people that go are kind of only going there for a pit stop to pad their pockets, and then it gives them the optionality to do whatever it is that they want to do with lucrative experience and a bit of a security windfall. If their next venture doesn't pay that kind of salary, they at least have they don't need to kind of remortgage the house, so to speak.
Yeah, fascinating, fascinating. Yeah, it's like people are looking really for more for purpose. I find, and like it's
Yeah,
tied a little bit to the pandemic. Like work has become transactional to a large extent, because we're talking over Zoom, and then all people care about really, in that case, is there's less of a sense of loyalty. So the way to actually generate a sense of loyalty is touching a person's heartstrings, right? Like the end
yeah.
purpose, what people are working on. So yeah, I find it fascinating that how you're diving into it. And then when you put your investor hat on, I love to understand maybe amplify the vision behind the firm. Like obviously you guys just opened up a an office in Quebec, at l'Espace CDPQ. So curious to hear about the plans over the next year and how you're looking to help companies.
Yeah, absolutely. So I think, our broader vision is once we can execute on our mission of kind of backing the right companies that are solving for complex societal and environmental problems at scale, we firmly believe that our vision that all investing will eventually migrate to impact investing will kind of come to fruition. And that's what we want to execute on. If we can show lucrative returns or better with very good downside protection, and there are numerous ways to measure that, um, more and more people will see the case. So we want to be catalytic. We don't view it as kind of it's just only us. We can win by having more people who think with that kind of framework at the table, particularly people later stage who have those deeper pockets than what we would have. In terms of kind of our near term vision on kind of what we want to do is, I think having the office and now a kind of a you know official place to meet entrepreneurs, founders, and other partners and stakeholders, that's a great step forward. And right now we're only a team of five, but eventually we're hoping that just like we did with this recent fund being a significant multiple of the first one, we kind of keep growing with fund 3, 4, and we can expand the team and the presence. At the seed stage, there's not as many investors as you'd think in the sectors that we're in. I think seed stage for more ICT tends to do pretty well, but we kind of are sort of at the crux of kind of things around deep tech and other areas that are a bit more underserved, which gives us a unique advantage that we can, choose from a very lucrative pool of companies and find out exactly which ones match best with us and which ones we match best with. But the idea would be to, right now, we're very concentrated in Ontario and Quebec, and kind of expand more. We do have some investments in Sherbrooke, but I'm sure there's much more that exists in Quebec City that we really haven't tapped, and there's still plenty in the Montreal greater area as well. So the idea would be to just have a bit more bandwidth to really focus on those. In terms of kind of broader expansions, we're reasonably active in the US, with one colleague based on the West Coast. And so far, we've done 2 investments out of there. And we're probably looking to do, it's not like way less than half the fund, but, somewhere around the quarter of the fund in the US. Eventually would be good to just be able to use geography to our advantage, since we're a mostly remote team with 2 official offices, one at Mars, one at Espace. Gives us that kind of flexibility.
Daniel, yeah, it's fascinating. So yeah, best of luck with Amplify. I hope you guys keep doing God's work here. Uh, but last question would be is if people want to learn more about Amplify or the work that you're doing, what's the best way to connect?
We're going to be going our website's a great way to do it. We release a completely free, no strings attached impact report. We'll be releasing this year's impact report closer to the end of April 2022. but last year's is already up there. That's a great way to kind of learn more about how to measure impact and include a couple of case studies from our portfolio. And then, of course, anyone who's interested can always reach out. Much like you, I always feel like someone else knows something more than what I do, and it's always an excuse to kind of meet with someone and get some questions going.
Amazing, Daniel. Thank you so much for your time. This is great.
Yeah, likewise. Thank you. Really appreciate it. Nice seeing you.